I want to thank everybody again for joining us. My name is Kim Fox, and I'm the Executive Director of PILBA. And we just ask that you remain muted through the presentation. And if you have any questions or comments, please put those in the chat box. And when Brian's done with his presentation, then we'll take some Q&A, if you will. But it is a pleasure to welcome and introduce Brian Tucker. He was so gracious to allow us to schedule him for this very important information giving session. We have a lot of our members, business members, that are interested in what some of the housing plans are for the county. So Brian, thanks for coming. As you all probably know, Brian is the Director of Economic Development for our county, and his role is to focus on several areas. One of them being working with existing industries to fulfill their needs, the infrastructure and transportation and workers that they need to be profitable and working well in Georgetown County. He also develops industrial parks and buildings for prospective companies that want to come and recruit and work in the wonderful place that we are so lucky to be able to work, play, and live in. And then he also has a new economic development initiative, which is internet providing broadband throughout the county, not only in the rural areas for the sake of development, but also for online education. So Brian is from Lancaster, South Carolina, and he is a Clemson Tiger. We won't hold that against you, Brian, but thanks so much again for your willingness to come and give us an update on housing for Georgetown County.
Happy to do it. I appreciate the invitation. Always happy to check in with you all and talk about what's going on. For any of you that I've spoken to before, you know I don't do real well with just blanket or straight presentations. I like a little Q&A and discussion, and we will certainly get into that. I did want to cover a couple of things before we got into a Q&A, just to give you a little bit of backstory about how we got to this point. And why it matters. Just over a year ago, on April the 1st, we had a new county administrator start, Angela Christian. Angela's now been here. She survived a pretty interesting year between the pandemic and the IT situation, the cyber attack we had here at the county. She's had a very busy first year, but one of her priorities really from day one was trying to evaluate the state of our economy as a whole. Not looking just at the Waccamaw Neck, not looking at the rest of the county, not looking at just industrial, but trying to look at everything holistically and figure out where we have gaps, where we have shortages, what we need more of, what we need less of. And quite frankly, out of the gate, one thing she realized is that she was having a tough time finding a place to live. She was challenged, to say the least. I think if my memory serves correctly, she was having a tough time up until the week before she started trying to find a place to settle in. As you can imagine, that's pretty unnerving, moving into a community with no place to live, never have been there before, and you can't even find a place to unpack your boxes. And she found herself in that situation. And I think out of the gate, I think she felt like she was missing some opportunities, and she just wasn't aware of some things out there that could have been available to her. Maybe so, maybe not. But that started us down the path of at least having an internal conversation about housing possibilities in Georgetown County. Where do people live? Where do people want to live? What are the prices? What are the availability? We were having this internal back and forth, and we finally got to the point where we said we need a professional to look at the state of housing inventory and prices in Georgetown County and give us a real honest assessment of what the what the current status is. So that's really what we did. Um, Part of the thing, as Kim mentioned, my title is Director of Economic Development. You ask any of my counterparts across the state, generally they're not dealing with residential development. That's not real high on their priority list. But for me, it's pretty critical for a couple of reasons. Number one, we need our employers to have employees that can get to work on a regular basis. We need, well, let me say it a different way. Our employees need to be able to live somewhere where they can have easy access to employment. So I mean, it's very symbiotic relationship, I guess, is the best way to say it. So we started looking at that. And a lot of times when I go around and talk, people think economic development is about recruiting grocery stores or retail stores or whatever the case is, and that's not normally the situation. Normally, I am focused on recruiting larger employers into the area, manufacturers, industry, again, entities that create a pretty large economic impact as they move into a community. And almost exclusively, we're doing that in the western part of the county or in the southern part of the county, not very much on the Waccamaw Neck at all. So again, this housing is a little bit of a different animal for me, but it's a very important part of the equation. As I mentioned earlier, Ms. Christian, as she was trying to move into Georgetown County, couldn't find a suitable place to live. And so, again, that began a discussion and a dialogue, and we have continued to dig into it ever since. So we started looking around. We found a couple of consultants and actually ended up, I think, interviewing 5 different consultants for this project. We ended up selecting Bowen National Research. Bowen had done some similar work in Beaufort County and in Hilton Head. So we knew that he understood coastal South Carolina. And in our initial conversations with him, it was sort of an intuitive conversation. He sort of knew what we were struggling with even before he arrived. So we were very happy to bring in Patrick Bowen. He dug in, he talked to employers, he talked to our planning department, city planning department, he talked to some of our real estate professionals, he talked to some developers and some builders, and tried to really get a sense. He talked to the hospital system and the school district to try to get a sense of what we felt like the state of the housing industry was in Georgetown County. And he delivered the report back to a smaller group in April. And I'm going to use that as sort of a jumping off point to talk about the needs assessment. One of the things we did ask Patrick to do was to break down the county into smaller segments. What we did not want to do was have him deliver us a report looking at Georgetown County as a single market. Georgetown County is not a single market. You've got the Waccamaw Neck, you've got the city, you've got the rural parts of the county. You've got what we ended up selecting was 5 different submarkets, so that we could truly understand what the state of the housing inventory was in each part of the county. And so we tried to be very intentional about not lumping everybody into one basket or making one general statement that covered the entire county. I am certainly not naive. I hear the frustration from some folks that live on the Waccamaw Neck. I live on the Waccamaw Neck, that feel like we are saturated, or that development on the Waccamaw Neck is creating other issues. And I'm not deaf to that. I'm not blind to that. And so we wanted to make sure that we could separate the different submarkets and identify where markets maybe were overheated or growing too quickly, and then where markets were not growing quickly enough. So we tried to go through this whole exercise of really trying to get down to what do we need and where do we need it? What do we not need and where do we want to avoid? And we think that's where we think that's the report that we were able to get back from from Patrick Bowen. And so I'm gonna share a couple of those slides with you to talk about, sort of what that report spelled out, and then we can talk about next steps and then get into a little discussion. Let me say from the beginning, as I said a second ago, I'm not deaf or naive. I understand that there are some genuinely concerned residents and groups that feel like the Waccamaw Neck is built out or very close to being built out, and that some of that development has created environmental conditions that are not sustainable. I get all of that, and I'm not even here to advocate development on the Waccamaw Neck. I'm looking at the bigger picture of what we need in terms of residential development and the price points where I feel like we need to have some opportunities for folks. Where we put it is ultimately a policy discussion that will happen at county council and will happen on planning commission. And fortunately, I guess for me, I can talk about what we need and avoid having to be the one to make the decision on where it goes. And so I'm happy to speak to that. I'm sure I will speak to that at some point, but just understand that I'm fully aware of some of those arguments and some of those, again, legitimate concerns. I'm going to share my screen now and just pull up the housing presentation that Mr. Bowen provided to us. I'm certainly not going to go through all 25 slides. I'm going to hit the high spots and try to get to a point where we can move on into a discussion and do some Q&A sooner rather than later. So with that, I'm going to share my screen. Can you see that, Kim? Y'all good? Thumbs up?
Yep, we can see it. Yep.
All right. I'm not going to go in full presentation mode because then I'll lose the other screen and then I'll be sort of meandering in the desert. So y'all just bear with me a little bit. As you can see, wanted to make sure you understand this is the needs assessment study that we commissioned from Patrick Bowen. Again, he presented this in April of 2021. Let's see here if it'll let me do this. There we go. Again, this is the scope of work that we tasked him with. We did not ask him for a holistic strategic plan on residential development. We were trying to gauge exactly where are we today in terms of our housing inventory and our demand. And that's really the limits that we placed on him. We didn't want to dig into what the solutions were before we knew exactly what the current state was. So we asked him to establish some study areas, which I talked about, and I'll refer to again in a minute. We asked him to go through and do a little analysis of the demographics and the overall economic state in the county. Ask him to look at supply, housing market factors. So, I mean, again, migration patterns, look at a bigger picture. Residential development cost was a big part of the conversation, and we'll dig into that as we go along. Also estimate what we're going to call the housing gap, what we currently have a demand for today versus what is currently available in the market, and then possibly look at some strategies and priorities, and we really did not spend a whole long time in that. As you see this is the 5 submarkets that we identified. East is what we know as the Waccamaw Neck. Central is what we know as the city of Georgetown. South would be south, west would be west, and north would be north. So the south, the west, and the north are very sparsely populated areas of the county. And again, you'll see as we get into the numbers, not a lot of activity in those areas. And that let's sort of chase a rabbit here for just a second. You know, as loudly as we hear concerns about overgrowth and overdevelopment in that eastern submarket, we hear the opposite in the north and the west and the south of not enough growth, not enough opportunities. And so we're trying to figure out, is there a way for us to encourage growth in those parts of the county where we're not currently seeing the growth, and try to approach this as a more holistic growth strategy than to just focusing on the eastern part of the county. So as we get in, we're also doing some comparables with our neighboring counties. You'll see those there. We'll do state averages. You'll see some comparisons to these counties. And so not going to spend a whole lot of time on that. So overall growth trends, you can see, and here's an example of what I was referring to earlier. From 2010 to 2020, the eastern submarket had an 18% growth, where you see the overall county average was at just shy of 12%, and the state average was at 14.4%. That's a pretty big difference, but when you also consider the fact that the state of South Carolina is growing at a remarkable clip compared to the rest of the country, it's very fair to say that the Waccamaw Neck is growing faster than South Carolina, and South Carolina is growing faster than most of the country. That's a fact that we need to acknowledge, and I'm okay with that. But then if you look at some of these other areas, you see much lower growth rates in the north and south and central, and you don't see anything anywhere close to what you see in that eastern submarket. And then the projected growth from 2020 to 2025 is lower amongst all 5 of those submarkets. Let's see. It's a little clunky here, but we'll figure it out. One of the other things to really understand is, and I tell this story or try to explain away this story every day as I'm trying to sell Georgetown County to potential employers. We are the oldest average age county in the state of South Carolina. The fact that we're the oldest is a little bit of a shocker to most people. But if you think about it, Charleston has had a huge influx of a millennial population and even younger. Hilton Head, there's still a significant number of younger folks moving into that general community, that general area. But Georgetown County is the oldest county, and it is getting older. And we are even losing our younger population. As you can see from those blue bars, we're losing the under 35 crowd. In, let's see, 1, 2, 3, 4 of the submarkets, we're actually losing the 35 to 64 crowd. So what does that say to me as an economic developer? It means we're losing our workforce. And that's a problem. We cannot grow if we're losing our workforce. The only submarket that was gaining the 35 to 64-year-old is the southern submarket, and that is skewed to a certain degree by the smaller numbers in that submarket. And again, we'll talk about that again in a second. But look at the county average compared to the state. We're losing 6.8, or between 2020 and 2025, we're expected to lose almost 7% of our under 35 population, and we expect a decline of 0.5% in our 35 to 64-year-old population. That's a problem. We're expected to grow by 17% in the 65 plus population. I can live with that. If you look at the state average, that number is actually below the state average of 18.1. But you see a 3% growth in the prime workforce age demographic, which is 35 to 64, and you see a modest increase in the under 35 change in households. So that's just some demographic data. Also, not a huge shock to anybody. The eastern submarket has the lowest percentage of folks living in poverty. The northern submarket has the highest, and you'll see there that the county average is about 18% of the population living in poverty, but 9% on the eastern submarket is living in poverty, which accounts for about 50% of the total county population. So that's a lot of numbers to say when you get off the Waccamaw Neck, you have a different place. It's just a different place. I don't think that's a shock to anybody. So I'm not going to belabor that point. I'm going to skip ahead. For a second. Kim, we talked about this earlier. Here are some typical wages for occupations that we have a good number of in Georgetown County. You see cashiers, waiters. I mean, I would much rather be speaking to you in person because I'm more of an interactive person. But you look through that list, we interact with folks on that list every day. Cashiers, waiters, home health care, janitors, retail folks, cooks, et cetera, et cetera. Without those types of folks in our community, we cease to function. But if you also go across and you look at what their maximum rent would be based on their wages, that's pretty low. And then you look at the maximum home price, and that's really low. Once we get over to the affordability piece, that'll come back around to you. Here's another stat that we use on the workforce side a good bit, and that's in-migration and out-migration of workforce. About 12,000 people drive into Georgetown County every day for work, and about 14,000 people leave the county every day for work. Generally, those numbers are flipped, where you have more people driving in than are leaving. We're opposite. It's also interesting once you dig down into the demographics, the demographic characteristics of those coming in versus those going out. Generally, those coming in are younger. They are lower wage employees driving into the county, or they are blue collar employees driving into the county. Those folks leaving are generally older white collar professionals. Or there's a second bucket. There's three buckets of the out migration. The first bucket is white collar and older. The second bucket would be service workers, so folks coming from Williamsburg County and even Horry County, coming to work in our restaurants and hotels in the tourism industry. The third bucket is blue collar skilled labor, and generally those folks are going to Berkeley, Williamsburg, Florence, or even Charleston County for work. Not a whole lot else to say about that. And again, keep up with your questions. We'll come back and hit on questions here in a couple of minutes. We'll skip some of this. This is a very, very busy chart, but just note that our unemployment rate is dropping, and that if you drive around now, there are help wanted signs everywhere. A lot of folks that are working have their choice of jobs. They can work in a number of different places. And generally speaking, folks will choose to work as close to their house as they can, everything else being equal. If you can make $14 an hour a mile from your house, you're going to do that versus driving 15 miles from your house for the same job and the same wage. It just sort of makes common sense. And so as unemployment, as the job market continues to get better, and by better, I mean employees have more options on where they work, you will see people gravitate closer and closer to where they live. That's going to be a problem for us because the folks on that screen that I showed a second ago, they don't generally live here. So our restaurants, our hotels, our accommodations providers, our retail stores, those folks are going to choose to not drive to Pawleys Island for work because they don't have to. And that's just economics. So providing them residential options closer to where they live, whether that be in Georgetown or whether that be in Pawleys Island, it has to be closer than where they currently their current commute. I don't think it's, I think it's in here somewhere. We'll get to it. But the idea of housing cost burden, and housing conditions, I'm more concerned right now with the housing cost and cost burden. Everybody keeps asking me, and the question keeps coming up as we have this conversation, what does affordable housing mean? What is affordable housing? How do you define affordable? And the answer is it varies depending on what you make. I'm a recovering mortgage banker, and I did that for 7 or 8 years. It seems like a lifetime ago. But the average rule of thumb is no one should spend more than 30% of their gross income on housing. So if you're spending more than 30% on housing, you're considered to be burdened. If you look at Georgetown County, 45.6% of our renters are considered burdened. And if you look at that, let's see, hold on. Charleston and Horry County, you see higher percentages of renters that are burdened. If you see ownership, Georgetown County is number one. We have the most homeowners burdened by housing than those 5 other counties. So if you look at that, it's substantially higher level of burden than the other counties. We're at 27.8. You would expect Charleston to be leading that, but they're at 25.9. And again, Charleston is higher than we are on the rent burden. So again, it costs a lot to live here. It just comes down to that. Part of that is development cost. We're having a conversation here now about why has it been so tough to find developers more interested in developing in Georgetown County? Well, part of it is just the upfront development costs between acquisition and site prep. That's a substantial cost in Georgetown County. But Patrick Bowen, I don't think he actually does say it on the bottom of this slide. Given the current development cost, new rental product must start at above $1,100 per month, and for sale product has to start at over $300,000 a month. Development cost includes the fees that you see there, and if you look at that, it's generally in line, but that's also, you need to take into consideration price range per acre, and then construction cost. These are countywide numbers. I can tell you the construction cost in the city of Georgetown is almost the same as it is as on the Waccamaw Neck. Price range per acre, miraculously enough, is not far behind. Georgetown is not far behind the Waccamaw Neck. So it's expensive to develop property, which means it needs to be a higher price point product, say that 3 times fast, for developers and builders to recover their investment. So when we start talking about needing something more affordable in and around the city of Georgetown or in the rural part of the county, developers still have to generate a certain return on investment for them to be incentivized into developing in Georgetown or wherever it is. So we know this. Developers are going to go where they feel like they can generate a satisfactory return on investment for as low a risk as possible. Historically, Georgetown hasn't necessarily been, again, except for the Waccamaw Neck, Georgetown County has not necessarily been that place. Here's some other some other slides. I'm happy to share this whole presentation with you. I'm just using this to go through and illustrate a couple of things. Again, this talks about housing age, conditions, and affordability. The other thing of note on the, again, the 4 submarkets, not including the Waccamaw Neck, our housing inventory is very old. The majority of it is pre-1970s, which means it's either not in great condition or somebody has to go in and renovate it. A lot of the folks, a lot of what we want in a house now is not what they wanted in a house in 1970. So you have to open up a floor plan, or you have to redo a kitchen, or you have to do something to it to make it more attractive, and make it more attractive. Look at, for a second, the table on the bottom there, housing income and housing cost and affordability. It breaks out the submarkets and then gives you the Georgetown County average and South Carolina average. Look at the range of median home values. So that middle column in the bottom table. You have median home values in these various submarkets that range from $85,000 in the north, which would be Rose Hill, Plantersville, Pleasant Hill, etc., to $329,000 in the eastern, which is the Waccamaw Neck submarket. That's a really, really big range. And there's really just not a lot of inventory. So just compare the central submarket, which is Georgetown and around Georgetown, to the Waccamaw Neck. And the median home value on the Waccamaw Neck is twice what it is in Georgetown. And again, that's an affordability issue. It's very expensive to live on the Waccamaw Neck. And quite frankly, that's not a shocker. It's very expensive to live on the coast anywhere. That's part of the appeal of living on the coast, is you have access to an ocean and amenities that you can't find anywhere else. So naturally, it's a very in-demand place to live. But again, for my purposes here, I'm trying to figure out what we need to do to generate activity in those other markets, central, south, west, and north, generate more activity, generate more product, and at a better price point that, or a more affordable price point than what you see in that East Waccamaw Neck region. I'm gonna ramble on for a couple more minutes, and then I'll pause for some questions. Here's the other piece, multifamily. I'm not sure. I don't really know how to say that. So I'm not going to. Multifamily. You look at the supply of multifamily. You look at the occupancy rates there, whether it be market rate all the way down to government subsidized. So this is everything from say Waterleaf and Murrells Inlet all the way down to the public housing in Georgetown. This covers all the multifamily in the county. There's a 96% occupancy rate, and you'll see that the tax subsidized and the government subsidized for public housing is at 100% occupancy. The market rate, the tax credit is showing it's 76.9% complete, but that's only because the new project that is recently finished is still in the lease-up phase. So it hasn't been out there long enough to even be completely leased up. You add to this slide the fact that we have 700 families on a waiting list for either tax credit subsidized or government subsidized. Those 700 families most likely are living in very inferior substandard housing. And you cannot argue the need for, I won't even call that affordable housing. You need more public housing. You need more government subsidized housing choice voucher projects somewhere in the county. I'm not going to be the one to dictate where that is or where it should be. I'm just telling you that there is a need there that we need to try to address. Here's some non-subsidized, so market rate. You can look at the bedroom bath breakdown, and you can look at the vacancy rate there, and you can see, I don't necessarily need to dive into that a whole lot. just a little personal aside here for a second. My wife works at our church, and we're taking on a new youth minister. And she sent me a text yesterday asking if I knew of a 1-bedroom, 1-bath apartment for rent somewhere in Georgetown County. I'm like, no, ma'am, I don't. And she thought I was just being lazy and not wanting to help her. So she put it out on Facebook and did not get any better results. I finally found one bedroom furnished apartment in the city of Georgetown for $1,350 a month. All of the other traditional apartment complexes have waiting lists. The non-conventional rentals, we have a backlog. One of the other things that sort of hit home with me, just as we were initiating this housing needs assessment, I got a call from one of my existing industries begging for help. They had just lost their third employee, or they had lost their third candidate. They had extended offers for employment to professionals to move into the Georgetown area and go to work for their facility. And they had lost 3 in a row because those folks could not find a place to live, period, that they deemed safe and affordable. And one never accepted the offer because they could not find any temporary housing up until the day before they were set to start. So we really do have 2 issues, and this is what I've continued to say and will continue to say. We do have an affordability issue, but we also have an availability issue. We need more housing of all categories across the board, from public housing to market rate apartments to entry-level homes, all the way up and down the spectrum. And I would absolutely encourage that development in all of these other submarkets, whether it be the central, the north, the west, or the south, understanding that the eastern submarket, the Waccamaw Neck, is already developing quickly. And I'll leave that alone. One of the slides I wanted to highlight, actually, let's go back to this one. So this is historical for sale housing supply. So in the entire county, you had just over 3,000 houses sold over a 2-year period. 2,500 of those were sold on the Waccamaw Neck, which leaves just under 600 over the entire rest of the county. Median price was $290,000 countywide, with $323,000 with the median price on the eastern submarket. So again, historically, somebody do the math, I think that is 76% of all the houses sold in the last 2 years have been sold on the Waccamaw Neck. Go back to what is currently for sale, and you'll see that they're just shy of 400 for sale. And you have 301 of those on the Waccamaw Neck. Look at the median prices on this one. So currently for sale, you have 300 for sale on the Waccamaw Neck at a median price of $441,000 and a county average of $389,000. Now, think about this for a second. These are what's currently for sale. This is what has sold. So you've seen the Waccamaw Neck prices escalate from $323,000 over the last 2 years to what's currently on the market is averaged at $442,000. That's significant appreciation over the last 2-year period. If you look at the median price again of what's currently available, median across the whole county is $389 compared to a median of $290, which is historical over the last 2 years. So you're seeing prices increase significantly. If you're a builder or a developer or a real estate person, you're okay with that. If you're the person trying to find a place and trying to enter the housing market, you're struggling to find your spot. And what ends up happening, what has happened, is we're losing those younger families to other places. Quite specifically, we're losing them to Horry County, and they're setting down roots in Horry County. and they're working here until they get tired of making the commute. Then they find a job in Horry County, and then we've lost that 35 to 64-year-old family. And a community is not sustainable if it's losing that population. And it's a tide that we've got to figure out how to turn around. This just speaks to what they call the housing gap estimate. So this is Patrick Bowen's estimate of what is needed in the county I think it's over the next 5 years. He's saying that we need 2,200 more units across the county over the next 5 years just to meet the current levels of demand. If I am successful at recruiting a new industry into Andrews or into Maryville or somewhere else in the county, these numbers will change dramatically. So this is a very conservative estimate of the housing demand. And again, I'm not talking about all multifamily. I'm not talking about all high-end single family. I'm talking about across the board. I mean, he says here 670 units of rental housing and 2,200 of for-sale housing. And again, that's over. I mean, if you look at the income breakdown there, that's based on our current trends. I hesitate to really drive this point home, but I will. It's very challenging to grow the county, even if we are just focusing on everything but the Waccamaw. We cannot be an anti-development county when we're looking at Georgetown and Andrews and Maryville and some of these other places in the county. We've got to figure out how to manage our growth across the county. Some places we need to speed up, and I will contend there may be some places we need to slow down. But it's one of the reasons we went through this exercise, is to make sure that what we thought we knew lined up with what the actual results were on the ground. So I've rambled on for a good long while now, but I'll open it up to questions and happy to address any comments.
Okay, thanks, Brian. A lot of great information there. Did you have a couple of questions so far from Dwayne Draper? Are there numbers for workers in each of the 5 submarkets and where they travel to for work? Yes, we can do that. That's in some of the deeper dives. So one of the things we've done is ask. Excuse me for a second. Yes, we can get that information. We have that information. I'm looking back at your question now. Yes, we know where the employees are and where they work. You can't nail it down to a specific exact number, but we've got some pretty good estimates. And I'm happy to share that with you. The next question Dwayne Draper has is chicken or egg question. Do we need more housing first or more industry first? Which one would be more likely to attract the other? Not to be tongue in cheek, but we do need to be able to. So from an industrial standpoint, I'll just tell you, it's easier for us to sell an industry on moving to Georgetown if there's no housing growth, easier than it is for us to recruit a residential developer to move into a community that's not showing any population growth. So that's not exactly answering your question, but that's my attempt at it. You know, the other part of this conversation, it's not just the two, it's industrial growth, residential growth, and commercial retail growth. Industrial growth
I feel like we can make a solid argument for growing our industrial base without some huge boom in residential growth. But we're very close to having a couple of those announcements work their way out. We're finalizing some of those projects. When those projects announce, we can't just begin talking about residential growth then. We've got to have a plan for residential growth, and we've got to be moving down the road of making those plans and putting the policy pieces in place. There's another tongue twister for you. Putting those policy pieces in place to make sure that when we have these announcements, when we do reach that point where we're realizing some industrial growth, we're not trying to react then to creating a plan for residential growth. The commercial piece is the real chicken and egg. Commercial growth follows rooftop growth, period. Right now, we're not seeing a lot of commercial retail growth on the non-Waccamaw portions of the county because we're showing population losses. You're not going to encourage a new grocery store or a new restaurant or a new whatever to spend a couple of $1 million to build a facility in a community that's experiencing population loss. That doesn't work. So that's one of the reasons we're trying to attack the problem now.
Great.
Those were the only written questions, but I'm happy if somebody wants to chime in and ask another one. I'm happy to try to address it.
All right.
There you go.
Well, Brian, thanks again for answering our call and giving us the opportunity to understand the housing study and the update. And if it's available to share, I would love if you would could send that to me so that we could share that.
I'll send it to you.
All right. And if there's anybody that would like to have a copy of that, if you would please just put your email address into the chat box. I will leave the Zoom open for a little while for anybody who wants to do that. Otherwise, thank you all again for participating and joining our Zoom. And Brian, thanks again to you.
Happy to do it. Thank you.